let's talk a little bit about what has got us to here, and then we'll talk about kind of where we go from here. 2020 appears to be the year that institutional investors have decided that this is a real asset class. How much momentum is there currently in terms of asset allocation?
There's a tremendous amount of momentum behind Bitcoin right now, especially as we lead up into the end of the year. There's a lot of uncertainty to come about the money printing of the dollar. I think a lot of institutional investors, they've had a lot of cash on their balance sheet. A lot of publicly traded companies now are acquiring Bitcoin, accumulating a position. I think the question historically has been, how do you justify having such an exotic, volatile asset on your balance sheet? And this year it's been, how do you justify not having Bitcoin on your balance sheet with the kind of performance that we've seen and the kind of inflation that we're seeing now in the market? Holding dollars seems like a very risky prospect compared to something like Bitcoin, which is completely finite, predictable, and even a greater store of value than something like gold.
The question is, will it actually act as a counterweight were we to see particularly tech stocks falling in 2021? If you take a look at the correlations between the real high-flying tech stocks and what has happened with Bitcoin this year, it is pretty close. Is Bitcoin really an uncorrelated asset, or is it basically part of the same story that we've seen in 2020 for tech?
Historically, Bitcoin has been uncorrelated to the rest of the stock market. I think what we're seeing right here now is that both financial assets are just kind of on fire and reacting to the money printing that's happening. There's loads, trillions of dollars being poured into the market. That's got to go somewhere. Unfortunately, most of it is not going to the individuals that actually need it, but to people that are speculating with it day to day. So I think a lot of that money, and I think we're going to see even more stimulus coming, is just going to get poured into financial assets. So for this run up, I think a lot of it is to do with the same reasons that the stock market is running up. People are just want to get out of dollars. They don't trust national currencies. The Federal Reserve is saying that there's infinite money out there. People just kind of don't understand where the end of that is. And I think are pumping the cash into assets, hard assets that are generating returns or more likely to hold value than a fiat currency.
Jesse, the Achilles heel of Bitcoin has always been its volatility, particularly for institutional investors. Do you think that volatility starts to come down now? And do you think it's almost a kind of circular argument because as institutions starts to move in, they will force the volatility lower?
I don't think that we're going to see a lower volatility Bitcoin for a long time. Maybe not until Bitcoin replaces all of the world's currencies, which is something that the true believers have predicted would happen all along, and something that the new believers are predicting more and more these days. But I think between 28,000 and $1 million of Bitcoin, you're going to have a lot of volatility. That's potentially another decade. So I think the volatility is not going to end anytime soon. Bitcoin certainly is not for the faint of heart. People should be buying in through dollar cost averaging. They should not be day trading this asset. I think that it's a buy and hold asset. It's a long-term investment. If you're trading day to day, there's swings 20+%. You can easily get burnt. The people that have done the best are the guys that bought in 2009 and forgot about it and are still holding it today.
Why is it just Bitcoin at the moment? Why are other similar products not seeing the same gains that Bitcoin has been seeing over the last few months?
It's actually not just Bitcoin. Ethereum has performed amazingly well this year as well. It's now back over $750. It was down at $100 at the beginning of the year. So that has also seen tremendous returns. The DeFi story is growing and becoming a bigger piece of the ecosystem. These days, you're seeing middlemen completely removed from financial contracts through DeFi, which is largely happening on Ethereum. So that's a huge success story. That's in the process of a major protocol upgrade. I think the future is extremely bright for Ethereum as well as for Bitcoin. And I think it's another asset that people should be looking at if they're looking for something else to get into in the crypto space.
How significant is the regulatory risk, and is that something we're going to start to see manifesting itself in a significant way in 2021?
I think we're going to see more regulatory involvement. At Kraken, we're licensed all over the world. Many regulators around the world, especially in the major markets, have come up with some sort of regime to regulate cryptocurrency. For others, it falls within the existing regulations. So it's certainly not the Wild West. It's not what it was in 2011 when Kraken got started. But the regulators are getting more and more savvy. I don't think that there's a risk of any kind of hasty kind of clampdown on the market. I think that they're getting better at understanding the risks. They're getting educated. They understand that this is a remarkable technology, not unlike the internet, that has the potential to completely change the world and deliver a massive amount of good to the world, and especially the unbanked population. Right now there's like 1 in 4 people do not have access to a bank account, and crypto kind of solves that problem for people. So there's a huge amount of potential for this space, and I think that regulators see that. And from a public policy perspective, and especially from a national security perspective of the United States, where I am, you would not want to crush that. I think there would be a huge outlash if the government tried to crush cryptocurrency.